Kotak Mahindra Bank missed estimates in the third quarter, and what perhaps disappointed the market more than the bottom line numbers was its relatively soft loan growth. The private sector lender is also conscious of the slowdown and attributed it to the overall environment. Shefali had logged on to the earnings conference call, now joins us now for more on that. Shefali, what were the key takeaways?
Well, some of the key takeaways were that the deposit growth that they are seeing, which was again a bit on the softer side, 12%, that should hold on, if not improve or become lesser. It should hold on. And more importantly, or rather in addition to that, the lending growth. So the reason for the softer lending growth this time around amongst private banks that have reported so far, their lending growth was on the lower side, just about 10%. So what was the reason for that? They said that there are lack of lending opportunities with suitable risk profile, and the management was management said it very strongly during the con call that they are not bothered about the numbers, they are not chasing numbers, but they would do what they feel is correct at this point in time. So that is something that they said very strongly, so that they are not really bothered about a certain percentage growth rate. And also the corporate book is not panning out too well for them, so that the growth in the corporate book was below the usual trends. And something interesting that they said is that even the existing limits that some of the corporates have, the large corporates, those working capital limits are not being utilized to the fullest. So remember, last earnings season, State Bank of India chairman said that as the working capital utilization picks up, the lending will pick up. At least from Kotak, they are saying something, it's that trend is not visible, or at least that is something that they are letting us know that is not happening. And also the vehicle finance book that has slowed down, just like for everybody else. And something that another interesting point is that because of the rate cuts, the corporate tax cut that has happened, that has given them room to grow in certain segments such as home loans because of the lower cost of funds and better risk adjusted returns that they are seeing now in some of these categories. So that is one thing. Apart from that, they think that in agri book they haven't seen much of NPAs because their book is because their book is collateralized by gold. So they're not seeing too much of pain. And some of the areas where they are seeing asset quality issues, large corporate accounts that reflected in this quarter, CV segment and unsecured book as well. So in credit cards and personal loans, they did see some delinquencies. So they said that it's in line with what's happening with the broader trends, something that the Bureau has also put out, the CIBIL data that came out. It's in line with that. So it's not a panic situation when it comes to the unsecured book, but yes, their delinquencies have gone up in the segment and they are more alert than before. That's what the management said over the con call yesterday.
So did analysts sound perturbed about the fact that the credit growth guidance has been revised lower, or the fact that the loan growth numbers are also now in sub mid-teens? Did anybody sound perturbed? Have the notes sounded concerned about that?
No, not really. In fact, one of the brokerage notes very aptly titled it that it's structurally strong but cyclically weak.
Cyclically weak.
So,
okay.
So probably that's the way they're looking at it. Nobody has cut down their target prices. Nobody has changed the ratings. So probably it's just the overall macro environment. So so people are taking it positively only, or seeing this as a prudent measure. But one of the notes said actually that probably Kotak management is becoming a little extra cautious, probably, which is not warranted, but that is one of the opinions. But nobody has really changed
their
target
prices. Okay,
yeah.
Now let's try and do this. Structurally strong, cyclically weak. How does it compare with yet another peer which is usually structurally strong and at times even cyclically strong, HDFC Bank? Now that we have the two bellwethers come out with numbers, what are the similarities, what are the differences?
Well, in both there were a couple of things, few things good and few things not so good. So a bit here and there. For instance, for Kotak, the net interest income growth was 18%. For HDFC Bank, that was the lowest in couple of quarters, 12.7%. And what contributed or what supported that the net interest income figure for Kotak was the increase in the margins. Their margins actually expanded. They already have the highest margins. So margins even went up further by 8 basis points to 4.7%. And in the case of HDFC Bank, the margins were actually just about flat. And the reason that HDFC Bank attributed to lower NII growth is the low yielding assets, whereas for Kotak, their strategy has been to focus on the high yielding assets. So they are not bothered about the number, chasing the number, but focusing on the assets which are giving them higher yields, or which has a good risk reward ratio. So that is the top line. Other income, Kotak saw a growth of 132% on a YY basis. HDFC Bank 36%. So on their respective basis, both of them are doing well on the other income, partly because of the recoveries happening and treasury income also, which is coming in this quarter for most banks. PPOP growth, both are similar, 23%, 20%. Profit growth, Kotak was 24%, HDFC Bank 33%. And loan growth, we've already spoken, Kotak was 10%, HDFC Bank was 20%. So here HDFC Bank had a better quarter this time around. And deposits growth, again, in terms of the pure business metrics, HDFC Bank did better when it comes to loan growth and deposits growth.
Better.
Yeah, significantly better, almost double of what Kotak has done. And in terms of asset quality performance, HDFC Bank had agri slippages, which keeps on coming for them because of their portfolio, but otherwise the QOQ increase, the gross NPAs in absolute terms was more or less similar for both the banks.
Okay, so in purely business terms, loan growth as well as deposit growth, I think HDFC Bank has done far better. And this is just the share of deposit, Shefali, which might make it an attractive proposition, simply because low-cost deposits might actually be the key for a lot of banks. But yeah, very interesting analysis. Thanks so much for putting that into perspective, Shefali. So Kotak Bank on-call takeaways now you know, and the comparison with HDFC Bank and what they have done. Both have their pluses and minuses. Kotak Bank would be an interesting one to monitor in the session today after the con-call details that have come out yesterday.